I'd like to call to order members of the Audit Committee of the Board of Education of Goshen Central School District, meeting at 5:30 tonight in the District Administration Building, Monday, October 3rd, to discuss the external audit completed by Nugent and Hausler. I will turn the floor over to you, Jen.
Okay, thank you. Good evening, everyone. Okay, so in front of you, we have this now 100-page document, just keeps flowing. So the first thing I'll ask you, let's turn to pages 19 and 21. These are the fund financial statements of the district. On these pages, we have the general fund, the special aid fund, the school lunch fund, capital projects, debt service, and the miscellaneous special revenue funds. Page 19 is your balance sheet items, and page 21 is the revenue and expenditures. So looking at the general fund for the year on page 21, you will note we did have excess revenues over expenditures of $612,800. And then we did have transfers going out to the other funds of $6,190,672. If you look over to the other columns, you will see that 165 was transferred to the special aid fund. That was for the general fund portion of the summer handicap program. And then the remaining balances went to the capital projects fund. The $6 million, this was primarily the use of the capital reserves that we transferred the $5 million over to capital to start that new capital project that's going to be starting. And then we also had funds transferred for the emergency repair project that will also be taking place. Okay, the special aid fund, as you may or may not know, is a expenditure-driven fund. So as we expend funds, we recognize revenue. So revenues and expenses equal in that fund. So you'll notice there was no net change in fund balance for the year. School lunch fund, we did have an increase for the year of $307,059. As opposed to last year, we actually had a deficit. So that is increasing. As I'm sure you are aware, 22-23, there is no longer free meals for everyone, so that could change for the current year. Capital projects fund, capital projects were not really up and running for 21-22, so the only expenditures in the capital projects fund was capital outlay for bus purchases last year. You see that 623, and then the balance is the $8 million are the transfers coming in. And then we have the entries because we paid off the bond participation loans that were outstanding. Okay. Debt service was just some interest earnings, $112. And then the miscellaneous special revenue, these are your extracurricular activities. So that you had excess revenues over expenses of $41,105 in the special revenue fund. Okay. Just flipping back a second to page 19, looking at the balance sheet for a second. General fund, you will note you do have assets of $21 million, which is 4 times what your liabilities are, so you have sufficient cash flow to meet your current obligations. You will note a little new item down here under the deferred inflows. It's called deferred lease revenue. So we had to do the implementation of GASB 87, which is related to leases. So that was the result of those entries and reporting the lease revenue that you have, the proceeds. Okay, does anyone have any questions on the fund financial statements from the district? Okay, so then if we just turn back to page 41 starts, so in this document we have the fund financial statements, which we just discussed, and then we have the entity-wide financial statements. And what that means is we're taking those fund financial statements and making all the GASB governmental accounting standards and booking the accruals, the assets. So starting on page 41, this is an explanation of all the changes that we make to get you from the fund financial statements to the entity-wide statements. So the first item you'll note is your capital assets less your accumulated depreciation of the 65 million. And also new this year was the right of use assets. This has to do with the lease standard implementation of the GASB 87, the 130. On page 42, this relates to the TRS and ERS pension obligations. You will note this year, both the TRS and ERS pension are sitting in an asset position. Last year, they were both sitting in liability positions. So net of the deferred outflows and inflows, you have $12 million net asset related to your pensions for TRS and ERS. The next item is your accrued interest. Number 5 has to do with your long-term debt. So your bonds payable, your compensated absences, and then your deferred outflows, inflows, and other post-employment benefits. Okay. Let's see. 6, actually, I see a little typo here. This actually related to just the adjustment that we do for the library. We make an adjustment for the debt that's related to the library that we have on the books. Okay. And then if we turn back, just kind of talk a little bit further about the pension going from an asset to a liability. So these are actuarially determined calculations. The TRS plan, the ERS plan are audited by KPMG. They do full determination, and then they send out letters to the districts of their share of each of these plans. Okay, and based on those actuarially determined calculations and certain assumptions that they make determines which way that number swings, if it's an asset or a liability. So you'll note on page 65, the current assumption that they used for ERS was 5.9 and for TRS was 6.95. The ERS remained unchanged, TRS changed slightly. And that's just a small factor in some of the assumptions that are used. But you can see just by this depiction here that if they increase or decrease those percentages ever so slightly, it drastically changes those numbers, specifically with TRS because it's such a big number to begin with. So it really plays a big part in how they go. It also has to do with how the plan itself is performing, the market, so, it fluctuates. So it's likely that for 2020, 22, 23, that it goes back the other way and we end up with a liability on the books again.
Do they factor in at all if a district has a reserve established at all for the ERS or TRS? Or no?
Not for this.
Not for that.
Not for this calculation, no. They're just purely, actuarially determined calculation for the plan itself, and then everybody gets their own share of the total of all of that. Okay. There's a similar depiction for the other post-employment benefits on page 70. These rates are at current discount rate that they're using for the actuarial calculations that are done for this liability is 2.16. That was a slight change, not drastic, but it did change. So similar depiction with the way it swings. Obviously, this is a huge liability. It's $177 million. That just keeps growing exponentially every year. It's on every district's financials. Unfortunately, that comes into a big play when we look at the net assets being, in a negative situation. But it's a direct result of these huge numbers that we're putting on the books. Here, okay. On page 74, due to the implementation of GASB 87 related to the leases, we did have to restate the opening net position of the district. So this just shows you that at the beginning of the year, we were sitting with 74,192,584 negative net position. We actually increased the net position for your right of use assets by 73,000. So the net position as restated at the beginning of the year is 74,119,406. Any questions? Just to kind of talk about a little bit about your single audit. If we go back to pages 88, 88 gives us a listing of all of our federal awards. We do receive federal monies for the school lunch program, school breakfast. You do have the special education cluster, your 611, 619, and then you have your title grants. We started having, since COVID, the education stabilization funds. Last year we had CARES money, which was reported in the general fund. This year we finished those grants last year. This year we started with the CRSA and the ARP funds. You'll see we spent about $280,000 of those monies during 21-22. I think your plan is capital projects with a lot of that money, so we'll start to see that being spent in 22-23. So again, the government has requested that these funds are subject to single audit. They're considered high risk. So by virtue of that fact, we're obligated to audit them as part of our single audit. So I'm sure next year it will be the same thing, and we'll be having to audit those funds as well. So this year for our single audit, we did look at the CRSA money and the ARP money, but because it was $280,000, it didn't give us enough to get to our coverage that we needed. So we also looked at your Title I and your Title IIA programs as well. So we have to get a certain coverage ratio of the total federal awards. So we did look at 4 separate programs, or considered 3 clusters, okay? In addition, you'll remember, Allison, last year we had the 611, 619 finding related to the personal activity reports for those grants. So we had to do a follow-up this year related to that finding from last year. While it was slightly different, we still found an issue with the personal activity reports, in that if the person working in the grant is working less than 100% of their time in the grant, they have to be certifying monthly their time that they're spending working in the grant. We found of the people that we tested that there was several people who kind of signed a bulk of them all at one time. It was like in February, they signed in February for all the months leading up to February. So it's still not being completed 100% the way it needs to be done. So I think, I've spent some time with Lorin, with Curtis, and we kind of talked about moving forward. I think Lorin's going to bring that all kind of in the business office, so they can be tracking and following up and making sure that those are being completed properly, timely, and that hopefully moving forward we can keep having the same findings. So I think that process will be better. I think it is something that kind of the business office needs to have a little bit of involvement in, just to be sure that it jives with what's in the financial records too, because it is tied to the financial statements itself. So on page 93, you'll see the management response to that finding. That's required to be included in the financial statements. Okay. And then the last audit report we have in here is related to your extra classroom activity funds, and that starts on page 95. We'll discuss when we get to the management letter, but there was one item in here just related to class of 2020 still has a balance of 6233. Generally speaking, that the class should determine what happens with that money, whatever may be left in their account prior to them leaving. Generally, it usually goes to student council, but it's really at the discretion of the club members where they want that to go. So that's just talking about that kind of ahead of time. I just want to see if there's anything else. We talked about the leases. Does anyone have any questions about the financial statement itself, or anything we want to go over in more detail?
I just had a question with the class of 2022, the receipts and the disbursements, are those accurate on page 98?
That's from the class trip.
Oh, is that what it
When
is?
they go to Florida, because of the cost of the hotel and.
Well, that makes sense then. I was just
Yeah.
that number compared to every other class is.
Yeah,
That
that makes
would
sense,
make sense.
2021.
Yeah.
Thank you.
Wow, they're just fundraising.
And spending.
Okay. All right, so we'll move on to the management letter if everyone's okay with the financial statements. Okay. So if we turn to page 3 of the management letter, the first item that you'll note of our findings that we point out is related to the 4%. The district is currently sitting slightly over the 4%, which we're all aware, Lorraine is aware of that. So because it's over, there's New York State law that you're in compliance, we have to put that in there as a finding. So we've included, I've done it a little bit differently than we normally do. Lorraine likes seeing the responses included in the management letter, so that's how we've kind of done it here. So you can see right in the, after our comment and recommendation.
Yeah, I like that.
Yeah. The second item has to do with when we were reviewing, we were trying to tie out the fund balance and we had some issues. And those issues related to some entries that were made for prepaid expenditures, the use of reserves. It always gets a little bit complicated when people start trying to make reserve entries. We generally find a lot of districts struggle with reserve entries and how to make those correctly. The prepaid came from, I think, Lorraine's predecessor. He was trying to do it right in putting it as non-spendable fund balance, but I think the way WinCap was working, and it just didn't end up coming out the right way. So you'll see in some of the attached journal entries that are here, those were kind of like the bigger entries that we were making, and it was ultimately trying to just correct the opening fund balance to what it should be so that we could report it correctly. WinCap is a little bit finicky, sometimes a little bit harder to use, I think, than the Envision program, so I think that might have just caused some of the confusion with that. So just because of the dollar value of some of those entries that we made, we put that in there as a one comment. The next item had to do with our review of budget transfers. We noted that some of the budget transfers that were made were they were being made by the same person that was doing them. There was no other approval of them. So that's not in compliance with the board policy. Lorraine and I did spend some time talking about moving back to the Envision, and that there are functionalities within Envision to have that all done electronically so that someone could input and then release. Same with the journal entries, just to ensure that that control is in place going forward. On page 4, this has to do with the federal fund, which we talked about with the PAR findings. It's just really a repeat of the finding that's in the financial statements for the single audit. It's here in the management letter, just relating to those personal activity reports not being completed timely. Okay. Down toward the middle of the page is the miscellaneous special revenue. As I mentioned, this is the extracurricular activity funds. So this is where we have the students involved, the central treasurers for the clubs, and then everything kind of trickles back to the business office. Now, if you remember last year, this change of it being, in like the trust and agent, the old trust and agency fund with GASB 84 last year, everything kind of got moved to this miscellaneous special revenue. So I think there was just a little bit of confusion about how to report that correctly for 21, 22, and making sure that that gets done on a regular basis. So Lorraine and I talked about it, and they are going to make sure that that's reported monthly, and that information comes here to be able to at least report that the revenues and expenses on a monthly basis. Okay, number 2, that was the class of 2020 club that needed to be closed out, so that's just in here. And that may very well have been just a COVID kind of thing. Okay, and then on top of page 5, similar to the budget transfer, this was the journal entries where we had one person preparing and entering the journal entries, and it was getting posted immediately. So we always like to have a good system of internal controls where there's someone preparing and someone reviewing. Again, a functionality that in Envision can all be done electronically, where Nicole could enter it and it sits in like a pending status until Lorraine has a chance to go in and review it. When she's okay with it, she can release it, and then it will post to the financial meeting.
Started that in July.
Yeah. So does anyone have any questions about anything in the management letter? All in all, I will say, I mean, you know, we were sitting here on November or October 14th last year, trying to get this in before the 15th. They did an amazing job this year, even with the transition. They worked really hard, and, you know, made it a smooth process. So thank you, and your staff.
The staff was great too.
Yeah, they did. They worked
really hard to try this.
They did, so we appreciate that. It makes it go smooth. So they're sitting here first, and it'll be all done, and we'll be.
That's exciting to me.
Exactly. But, you know, it was a good year. Went much smoother, and, you know, I have full confidence that next year will be even better, and, yeah.
No, thank you, because you have a lot of this in place since July now.
Yeah.
That's
Yeah.
awesome.
Yeah, okay, so.
That's good. Thank you, honestly, always with that extra classroom too.
Always. There's always something.
Yeah, you know, it's just one of those things, it's kind of high risk just by the nature of it. And you've got, every year you've got different kids, you know, a lot of times you have different advisors, you've got different treasurers in some cases. There's just a lot of hands, it's a lot of things going on, so.
They struggle to coordinate. I know the old clerk at the high school was so good about it. She unfortunately passed away, and they're just wrapping their brains around it, trying to get them to a point where they feel like they have a set process in place.
Yeah, so then couple all that with that, and then it doesn't make it any easier.
Yeah, when I saw class of 2020.
I think you could look at most schools and find the extra classroom is gonna be somewhere in there, because you can always look and find something usually in the extra classroom, so.
They can't automatically transfer it to the next 2021, 2022.
I mean, they're not supposed to, I mean, the way it's.
If there was like a balance left.
I mean, that's probably what's gonna end up happening in this case, just because the kids aren't here anymore, but generally speaking, that should almost be like, you know, one of the checklists before they finish the class to make sure that they've decided, you know, where those, I mean, if it was a couple dollars, it wouldn't be the end of the, you know what I mean, but $6,000, that's a lot of money. Which unfortunately, they probably didn't have the time to spend with COVID and, you know, it's probably money to raise. Right, they couldn't spend it, right, where are you gonna go, so, yeah.
So at that point, who, if we can't get those kids back, how does that determination for them goes?
Well, I think generally speaking, it's probably just gonna, the district's just gonna have to make a decision to, you know, put it to the student government or whatever. I mean, that's generally what happens.
Because then they can also, if people ask for more money, I think if classes are short on funds, they can determine if they can have some of that too, right?
Yeah, I mean, as long as ultimately the kids are supposed to be making whatever the decisions are. You know, it's really about them and learning. I mean, that's the function of the extra classroom funds, is to teach the students about finances and money and how to manage, and so they're supposed to be the ones, you know, making those decisions. So yeah, if they wanted to say, you know, went to the student government and then the student government wanted to say they want to give it to whoever, that's their discretion to do that. Yeah.
Any other questions? That was easy. Thank you, Jen. That's nice to hear.
You're welcome.
So I had to officially